So I guess the question for property investors are, should you be a borderless investor, and what does that actually mean? Because more than ever, I'm talking to clients who are keen to actually not invest in their own backyard and actually look into other states for opportunities to buy. Because one of the biggest questions I'm always asked, with my role on the show, with my role here at Empower, is how's the market doing? And it's kind of a strange question because it's probably a logical one that people want to know about. But the question is, are you buying? Are you selling? Are you investing? Are you researching? There's so many parts to that question. And I guess the big part is, which part of Australia are you referring to? Because Australia is not one big market. And in fact, I think that's the biggest mistake anyone could possibly have when they're thinking of investing in Australia, thinking that it is one big market, because it's made up of hundreds and hundreds of sub-markets. So I was thinking about this the other day, and take, for example, the period of time from 2005 to 2009. And historically, that was proven to be not a very good time to be buying in the Sydney marketplace, because they had flat growth for that 4-year period of time. So if you were actually someone who lived in Sydney and was only prepared to invest in Sydney, there's other people around the country who'd invested in other markets that have done really well. Perth, for example, it did phenomenally well just before the GFC from 05 to 07, getting enormous capital growth. So if you were a borderless investor living in Sydney, deciding that you would move your money out of Sydney and maybe buy into the Perth market around 06 or 07, you would have done significantly better than if you had just said, look, I only want to invest in my backyard, I want to stay in Sydney, and therefore I'll just see what happens. So during that period of time in 05 to 09, you had Perth doing really well, you had Melbourne doing really well, you even had Canberra doing really well. But again, Sydney wasn't doing so well. So it's important to understand that the different states move in different cycles. And even if you think really currently right now, Melbourne and Sydney have done really well for the last 2 years, but Canberra and Hobart and Adelaide haven't done so well. So if I live in any of those cities, if I was prepared to actually invest in the bigger cities of Melbourne or Sydney, it would have done so much better for my portfolio. And what it meant was the equity that I get in those markets means that I can pull it out and maybe look for the next state that's in the upturn phase of the cycle, so that I can move my money and jump into that area. So in my view, it's important to consider being a borderless investor. There are stamp duty considerations, there's land tax concessions that you can get. There's so many wonderful benefits of diversifying your portfolio across the country and moving it into markets that are likely to do better, as opposed to someone who just says, look, I feel comfortable and safe investing in my own backyard, and if they're buying at the wrong time of the cycle, they may not get some growth for 2 or 3 or 4 years, which would be really disappointing for them. So my message is clear. I'd certainly encourage people to be a borderless investor. I'm seeing it more than ever where people are more comfortable buying interstate, and if you're prepared to do that, chances are you'll get an outperforming portfolio that'll serve you well for your financial goals.